Tax season heating up. On this segment of the program, we're going to be talking about some of the things that are sort of catching our eye, if you will, early in the season, and certainly some things that you as a taxpayer want to be aware of as you sit down and begin the organizational and completion process of filing your federal tax return. So welcome back into the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of good folks that are experts in a variety of matters that stand ready to help you change your life with a successful and cost-effective financial plan that produces superior investment results and provides you with peace of mind for the future. So what's catching our eye? We're, a few weeks into tax season. Certainly we've started to kind of look at tax returns at the office. And I guess the first thing that is catching our eye is that the amounts that people owe are perhaps a little bit lighter as a result of what happened in the market. I guess that should make sense, right? Because at the end of the day, if the market has a bad year, then dividends, capital gains, things like that aren't really going to be as high as they are when you're having a good year in the markets, right? So then without that, capital gain dividend, or should I say lower capital gains and dividends, then that means you're going to owe less. So that's a good trend. So we're seeing that trend sort of that is, and that would be a trend that we would say that we see more on sort of the retiree side of things, where again, bad year, okay, the only silver lining is that you're going to have less to worry about in terms of taxes on dividends, capital gains, and things like that. So that's number one. Number two, though, is the flip side, where refunds generally are not as good as they were, particularly if you think about it from a family perspective. Because the family perspective, that's where a lot of the tax credits and things like that we've seen over the years really came in pretty strongly, sort of in this post-COVID era where you had stimulus checks, you had expanded child tax credits, you had expanded credits for dependent care, all of that stuff that was really coming in. And some of the numbers, I mean, it just is staggering how big the numbers were when we think about the enhanced child tax credit, when we think about the expansion of the tax credit for dependent care expenses. It was enormous. There's no other way to say it. The reality is, though, none of that was extended for 2022. So as you're doing your tax return, your refund, not nearly what it was. And so that's kind of what we're seeing more on the family side of things, where those child tax credit, dependent care expenses credits would be more applicable, if you will. The other thing that we're seeing, and I guess this really is something that taxpayers need to be aware of, and more and more of the transactions of life are getting reported on tax forms. And we've certainly talked previously in the program about the 1099-K, which is a reporting of any proceeds that you got if you, say, selling tickets on Ticketmaster, or maybe on have a little side business on Etsy or eBay or whatever the case may be. Now, the requirements for the issuance of those 1099-K was the draconian shift in them in terms of lowering the threshold of what produces those documents. What was shifted a year, okay, so that's good at least, but you're still seeing a higher level of proliferation of those types of documents, and it really does leave people sort of scratching their heads as to what to do with them. Along with the fact, when you think about real estate transactions or legal settlements or anything like that, all of those whereby previously you didn't necessarily see tax documentation on them, more and more now we just see this proliferation of tax documentation on these types of transactions, the biggest of which was the 1099K. The reality is that was delayed a year, but you're still seeing those forms getting generated by folks like eBay or Ticketmaster or those kinds of things. And so it begs the question, or it underscores the importance, if you will, of making sure that the tax form that's getting produced is an accurate one that really reflects the true nature of the transaction. Because if it doesn't, what's happening, and again, this is sort of the dirty secret behind the proliferation of all these tax forms, is anytime you get a tax form, it's been copied to the IRS. So the IRS is pushing rules that effectively require more and more information to get disclosed on various 1099 forms out there. So whether it's a real estate transaction, you may get a 1099-S that previously, a few years back, you probably wouldn't have gotten that. Or if you got a legal settlement, maybe that generated out a 1099 miscellaneous or a 1099 non-employee compensation. And so the important part is that once that is done, understand that a copy is getting generated to the IRS. Once that is done, then the IRS expects to see full disclosure of exactly what is going on that particular transaction. The problem is that not many folks that are filling out these forms necessarily have an appreciation of the tax nuances for when you distribute money out and then create a tax form that's copied to the IRS. Give you a case in point, two cases in point actually. And this is why when you engage in a transaction, you've really got to make sure and ask the questions and make sure that the person that is doing it understands what it is that they're doing, particularly if they're going to put together a tax document and send it off to the IRS, because then it's going to be on you to make sure that you report it correctly. So here's example number one, 1099-S, which is generally a document that you get on the sale of property. So the 1099-S shows the gross proceeds. Situation that we're working with on a client, they were the trustee of a trust. At the time of the closing, the money was dispersed to 4 different people. So money closing transaction is done. Money's dispersed immediately to 4 people. Those were the 4 beneficiaries of that particular land trust. Well, lo and behold, the 1099-S gets issued, written in hand. Okay, so it wasn't exactly a professionally done exercise, but it shows all of the money for the entire transaction. Meanwhile, keep in mind, the money went to 4 different people at the time of the transaction being completed. It's showing one 1099 for the gross amount going to one individual who was the trustee of the trust under their personal Social Security number, not anywhere showing where the money went to the 4 people. So that's a real mess in terms of how you deal with that and how you report that, because the IRS is expecting to see a large transaction coming in the tax return under the Social Security number of what that form was issued for. So make sure you understand the difference between the forms and understand to ask the question as to what's going on with this form and how is it going to really work and impact me. Second scenario we've seen has to deal with someone who got a settlement from the public school system. In that particular case, they generated out the 1099. The entire amount of the settlement, the gross amount, was distributed out in the form of a 1099 non-employee compensation. Well, guess what happens there? First of all, it's a gross number that she got. Don't forget, the lawyers took 40% of that, so she didn't get that gross number. She got 60% of that number. Now she has to deal with, how do I report the gross number? How do I take into account the expenses of the lawyers? And oh, by the way, because of the type of tax form that you issued it on, this settlement money is now getting reported as wage money, and then I have to pay the FICA tax, both sides of it, to the tune of an extra 15.3% FICA tax on that beyond the income taxes. unbelievable. We're going to take a break and kind of wrap this conversation up of why it's important to know what tax forms are getting issued and when, here on Dollars and Cents with Joel Garris of Nelson Financial Planning.